Right, well, we are looking at the price of gold continue its recent run into record territory. That bullion boost has certainly helped out the Canadian stock market, which we mentioned is now trading in record territory. Material stocks have been doing well. We're back now with Laura Lau, Chief Investment Officer at Brompton Group, to talk a little bit more about portfolio ideas. Before the break, you talked about some conviction around energy. Obviously, that's been a solid performer so far this year. What do you make of the run-up that we've seen in gold?
So what we've seen in gold is central banks have been continuing to buy, and Asia, particularly China, the Chinese consumer has been buying gold, because when you think about it, what choices do they have where they put their money? In the past, it used to be real estate. And of course, that bubble is popping. And then, do you want to put money in the banks for deposits? Well, that's connected to real estate. And then another safety trade used to be the Japanese yen. But the Japanese yen has been very weak this year. We do think that that will reverse at some point. We do think the Bank of Japan at some point will say enough, it's enough. The currency's gone down enough. But where is your safe haven? So the safe haven has been gold for Asians, especially China. And
what about this argument that people make that whether it's gold, whether it's Bitcoin, there's this macro concern about levels of government spending around the world. And if I want to hedge that, I look for options that are out there. Do you buy into that argument as well?
So we've seen that, pop up every so often. And when you think about it, gold doesn't have deficits. So that's part of the reason. And, also we're at this point where people are trying to avoid sanctions. So you use Bitcoin, you use gold. So I think there's a bit of that around as well.
Okay, so materials as a subgroup for the Canadian market they're the fourth most influential, but it's more than a 10% weighting. So if you feel constructive on gold, if you're relatively constructive on energy, I mean, those two sectors alone make up close to 30% of the index. Then you got financials and industrials in there. Would you be surprised if the TSX continued to reach new records in the coming weeks?
I think that the TSX should actually continue to make new records because, as I said, we're at this point where if the economy is good, then cyclical stocks should outperform, and they're actually very attractively priced on top of that. And in terms of golds, if you want gold companies, you come to Canada. There's really not a lot of good gold companies around the world. So we could get more foreign buyers simply if they want to buy gold stocks. But what's been, inhibiting some of these gold stocks is we've seen the gold price go up, but their margins have not gone up because their costs have gone up as faster than the gold price. So they're going to have to prove that they can manage those costs. And one of their big inputs is, of course, energy. So that is part of the issue, too.
And what about considerations with the bond market? I think that every time we've seen, at least with the 10-year, when the yield starts pushing higher, equity investors have to start wondering what exactly that means for the stock market. Now we've got this new, we were talking before the break, dialogue around what ultimately happens with interest rates this year. Do you have to be watching the 10-year yield in the United States if you're also watching these record highs for the S&P and the TSX?
I think you do. I think the 10-year yield is also quite connected to inflation. And it looks like inflation could run a little harder than expected. Everybody was expecting inflation to come down. It's sticky at the bottom. And we've already seen unions are strong. You talked about Airbus today. The unions are like, we want all that past inflation, we want it now. And that is what the Fed's been concerned about, is that these inflationary pressures, they spiral. They get bigger and bigger, and that is a danger. So what we're seeing is we see the 10-year, if the economy is strong, it does look like it is, and we'll see what happens to the inflation print this week in the U.S. If it is strong, then we could go over that, very psychological 4.5% level. But I think that means the economy is strong. If the economies are strong, that's what's most important for the stock market, I think more than the level of the 10-year. So I do think that the U.S. economy is stronger than anybody thinks. And if so, the stock market can continue to perform well.
Okay, so we'll watch. Speaking of watching, so you have your glasses.
Yes.
I have my glasses. Do you have a watch plan? I mean, I'm going to meet up with my daughters later. I'm not quite sure what we're doing. You go down to Bay Street and just take a look out the window? What's the game plan for Laura Lau?
That's probably what I'm going to do. I got a couple of these. My daughter bought 24 of these.
She's an entrepreneur.
Yes. Yeah. So I got a couple of these, so we'll probably go down every so often and take a look at the sky.
All right.